There are two different types of loans under the Federal Stafford Loan Program. One of the most common questions, what's the difference? An unsubsidized loan and a subsidized loan. With an unsubsidized loan, this is actually a non-need-based loan, meaning it's not going to take into account your expected family contribution to determine if you have financial need to qualify. The unsubsidized loan does not have any interest subsidies while you're in school or during authorized periods of deferment, meaning you're responsible for the interest. A subsidized loan is a need-based loan. Your school needs to determine that you have financial need to award you a subsidized loan. When you're enrolled at least half-time, during your grace period and other periods of authorized deferment, the interest is going to be covered by the government, making it more of an advantageous loan. People tend to like it a little better. But here's the thing, your school needs to determine that you have financial need. Meaning if you didn't get one in your financial aid package, you can't just apply for it or add it on. You're gonna have to talk to financial aid. I'm Elaine Rubin, Senior Contributor and Communication Specialist here at Edvisors. If there's any other questions you have on financial aid, about student loan borrowing, be sure to comment below. And don't forget to subscribe because you do not wanna miss out on our videos that might answer some of the common questions you have. Thanks.